Welcome back to the Driven to Succeed Real Estate Podcast. I'm your host, Brandon Olson. Today I have a special guest from LPT Realty. Her name is Tracy Shalander. She's been in the business from 10 years, and I'm excited to have you on, Tracy. Welcome.
Well, thank you. Thanks for having me. This is my first time doing a podcast, so it's kind of fun.
Yes,
Yeah, I'm
it,
excited.
it should be. It should be fun. Um, Tracy, what I'd like to get into just a little bit of your background. Like, how did you get into real estate in the first place? But first off, like, I saw on your, I don't know if it was your LinkedIn page or your Facebook page that you're from Miami originally. Is that correct?
Yes,
Yes.
yes. I am a Southern girl at heart, and I've been in Minnesota longer than I ever lived in Florida, but I still feel like I'm a Southerner. I'm sorry.
Yeah.
It doesn't go away.
So do you travel back? Do you get back
Oh,
there?
all the time. In fact, until recently, my parents and my sister lived in Daytona, and so I always had a place to go for vacations. And they moved to Tennessee. The nerve of them! I mean, when they told me they were moving, I'm like, no, no, this can't be true. And so now I don't have a spot in. I mean, we go to Florida all the time.
Sure.
I usually go when my daughter just graduated high school, but we usually would go down for MEA break and go for March, for the spring break.
Yep.
So, now we'll just have to stay in a hotel.
How about Daytona? Yeah. How about Daytona 500? Do you ever get there?
I mean, we went there, like when my son was younger, we went there so he could see all the, we just toured it.
Sure,
But
sure.
no, I don't want to sit through that race. That's so noisy. Yeah, no,
I
I'd
suppose
rather be at
growing
the
up
beach.
there, can
Yeah.
you hear it then where you lived, or like?
No, no,
Okay.
because I didn't never live in Daytona. Just my family did.
Oh,
But
okay,
cause
gotcha,
I was I was a
gotcha,
northerner. At that point, they'd already gone back and left me. So
gotcha.
yeah,
Oh,
yeah,
right on,
yeah,
right on.
kind of stinks.
Well, so let's talk about your journey into real estate. What did you do before that? Were you in the auto business at
Oh,
one
yeah,
time?
I've been in sales my whole career. I graduated from the University of Minnesota with a marketing degree, and that marketing degree got me into customer service, and then I moved into sales. And so, really, from very young, I was in sales my whole life. I used to sell computer systems, and then, back when it was the old big mainframes that took up a whole room,
Oh,
I
sure.
used to sell computer systems. In fact, right over here by you in the 8400 tower.
Oh, really?
Yeah, we worked out of that office. That was a cool office. And then computers, and then I did freight. I worked in the manufacturing industry for 10 years, calling on freight companies. I mean, calling on companies that ship by LTL freight. So I worked for a freight broker, and then I worked for like Yellow and Saia. I mean, not Saia,
Okay.
but Estes. So I did that for quite a while. And then I got laid off from two companies in a row that I had gone to. One, and then the second company that hired me, got laid off. And then my resume didn't look so great, and nobody would hire me.
Oh no.
Yeah, even with all of that years of experience,
Right.
I couldn't get a job for anything. So that's when I went into real estate.
Gotcha. All
Yeah,
right. Well,
it was
s-
brutal.
yeah. So you kind of got pushed into real estate, but what would you say now, looking back
Oh,
at, was it one of the best things you've done?
Oh, for sure, for sure. Who would have ever known that all those years of sales made me a better realtor, I think, because I was always looking for the close. I
Right.
mean, I was built to close. I mean, if I didn't close a deal, I was not a happy girl. And I just took that right over into real estate, and
Yeah.
it's been awesome. It has.
And I would have to believe that brings into customer experience and right?
Yes, yes, all that custom. Oh my goodness, yes. Customer's always right. Travels with you no matter where you go. I
Right.
mean, it has to be the way it is.
Yeah. And I mean, because if you want lifetime or lifelong customers, that's, I've seen way too many, I've heard too many stories too from from clients saying, hey, this agent, we just went into the first home and, they just want to write it up. They just want to make an offer, right? And then, some of the best agents I know are like, okay, well, let's look at like some of the pros and cons because just FYI, this is like on a busy street. We want to make sure like just pointing out things that some people wouldn't see, not being in the business and just get kind of under either as a beautiful home or whatever it is and so forth. So I'm assuming,
Oh yeah, yeah. No, I always tell my buyers. I said, there is no one who is going to talk you into buying a home. I said, you're going to know when you get in that home, you're just going to know. You're going to get a feeling. You're going to say, hey, Trace, this is the one. This is the one we want. I said, there's nothing I can say that's going to make you buy a home. And I just want you to know that right now. I said, all I'm here to do is help you see things in that home that you might not notice because you're awed by it and you're so excited. And I'm going to point out, the cracks in the roof, or I'm going to point out, hey, the floor is sloping a little bit. And, I'm going to help you see those things because as your buyer's agent, that's my job.
Absolutely.
And then hopefully that'll help you, see the whole picture rather than just be all excited because now you found this house that you love.
Yeah.
And I'm not trying to talk you out of it when I'm showing you that, but that's part of my job is to help you see those things.
Absolutely. And I think that really goes into, we always hear this, with technology, or the buyer's agents are going to go away with the whole NAR settlement. And it's like, listen, people need this, people need realtors. Um, if you're not doing this every day, like, how do you know this stuff, right? And okay, we're going to do everything over video, right?
Oh,
Or,
never. It
um,
just it could happen. I mean, there's two you know remember during COVID people were buying houses visually. They were I did quite a few of them where they were from out of state, they were coming from California, they were coming from wherever it might have been. And so I was doing Zooms at the house. I'd go to the house and I'd Zoom them, and or we did FaceTime, whatever it might be. But unless you're in that house, you can't see that other stuff.
no,
You just can't. And honestly, even then, as my job as their buyer's agent, I would show them, hey, wait a minute, I got to show you this down here because
right,
this was not in the pictures online.
right.
And it worked. I mean, it did help them see it, but it was crazy. I mean, I was just like the money. I remember I sold one house, I think it was like 800,000, and they never stepped foot in it until they closed. Ah,
Right? That's a lot,
it
right?
is. It was
You don't want to have
crazy.
buyer's remorse on
No, no,
$800,000.
and it was a second home.
Right?
So, it was just one of, I think that, because they were still commuting back and forth from California. It was
Right.
crazy.
Right.
But hey, it worked out and they love it. They live there now.
Yeah.
But it worked out
Awesome.
great.
Awesome. Well, that leads me into asking, one of the questions, or I get the question right now a lot, is why is now a good time to buy? But let's just talk about why is that? Like, why buying a home now?
You know, we all have buyers who come into our life and that they're all excited. They want to get going. So you get them out there and you show them some homes, and then they get a payment from a lender, and they go, "Oh, you know what? Maybe we'll just wait."
Right.
And I try to dig into that, like, why are you waiting? You're not in multiple offers. You have houses that are sitting on the market for 30, 45 days, which is very common right now. What are you waiting for? What is it? If you're waiting for the price to drop on the interest, I mean, if you're waiting for the interest rate to drop, then talk to the lender. The lender has programs for that. Why do you want to wait till you have to get into multiple offers, pay 20, 30, $40,000 over list, lose that equity, which how many years? I don't think people understand how many years they have to live in a house to earn $30,000, $40,000 in equity. It's a long time.
Right.
You're looking at a minimum of 5 to 10 years, depending on what the appreciation's going on in the market.
Right.
Why go there?
Right.
I mean, right now there are so many pockets in the city right now. I have two houses in Ham Lake right now that are beautiful homes, and they're not in multiples. Gorgeous. One's on 2 acres with a 46 by 26 extra garage, every man's dream, and it's sitting.
Right.
Why?
I think the major reason why is people have uncertainty, but most when I'm talking to my past clients, most people are saying, "Oh, the rate's got to come down," right? And so I've talked to them about that. Like, well, there's ways that we can make this worse, and we're gonna get into that because I have some great strategies for sellers right now. Instead of like let's go to market, but um, the second that rates truly do come down and they want to move 100 basis points, which should in all purposes move us a whole point down. So if you're talking at a discount point today gets you 6.625, 6.5, 6.75, that's going to get us in the fives, in the mid fives, upper fives. But what we already saw earlier this year is the second a week, because there was a time in April like a week
It went
where it went
crazy.
crazy because what happened? I mean, April's always kind of a busy time anyway, but it we reached where it was like six and an eighth. And it was that weekend, it just went like boom, 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 boom. Like applications were coming in, the news was saying, hey, rates are come down, blah, blah, blah. So, and now we get a lot of things on the news right now, but we need that positivity in the market to really show, um, what homeowners are looking for. But the second that happens is what you're going to run into.
Oh, they're going to be in multiple
It's going to
offers.
be a seller's market again
Yes,
immediately once
yes.
that happens. And
Right now, I mean, sellers are willing to work with buyers right now. They would be happy to get under contract and get, if you give them a full price offer, I would say in today's market, you probably could get sellers helping you with your closing cost. Or you might get them to throw in the home warranty, or you might get them to do something else that you want.
right,
But if you wait and let those rates come down because you're shopping your payment, um, you're going to be paying over list. You're not going to get anything out of them because they're going to have multiple offers to pick from. And if you're not one of those strong buyers, if you're an FHA, which is supposed to be a strong buyer, but I'm just saying the perception, you're going to be at the bottom of the pile again. Why not walk in right now with an FHA offer, not in multiples, save that money and put that money towards, if you want to pay over list, great. But why don't you just take that money and pay down your rate and get it to the rate you want on a payment?
right.
It makes no sense.
And then in doing that too, um, if you let's just say, because let's go to where we just came from the last couple of years, where it was everything is, and still, don't get me wrong, I still have plenty of people like, hey, we're putting an offer in, and I call the agent and like, yeah, we're calling highest and best, right? Like, okay, and it's just certain areas, right? Like
Oh,
Hawaii's at a school district
oh,
is
for
one.
sure, all day
Like
long,
it's
all day
that one
long.
is like,
Edina.
I was so happy about my $1 million buyer that came in. It was like super. It was like that. It was gonna be super easy. I'm like, oh, this will be a slam dunk. Like 5 homes we missed out on because it was just multiples, and finally we won. But it took 5 homes, and that didn't ever happen in the past. $1 million home buyer was usually, it was like, okay, let's just negotiate.
Yes, yes.
1.3 down to 1.25, right? Or
Oh
something
my
like that, something
gosh.
crazy. But now it's like, oh, 1.3, well, we sold it at 1.45.
It's
Like,
crazy. It is
150
just
grand
crazy.
over list. Anyway, so that you have those areas, but going back to now being able to, like, hey, we want an inspection, right? Where again, if you get back to that market,
There's no inspections.
yeah,
Yeah,
like, hey,
no.
if you want to win this no inspection, or you can get an inspection, but say we're not gonna, we just want to make sure that this house is solid. We're not gonna ask for any additional money off. So there's
But
strategies like
still
that, but
then
you still like,
But then you're still contingent on the inspection,
correct,
if you want to be able to back out. Now, if you go in and say, hey, I want an inspection, but it's just for my own information, it's not contingent on the inspection,
mm-hmm,
then you're good to go.
right.
But then it's kind of like, why are you
Why are
doing
you
it then?
spending the 500 bucks
Yeah.
to do
I
it?
mean, you're going to get yourself all stressed out if you find out about something and you have no out.
Right,
None.
right.
So yeah, that's another benefit of buying now. If you feel strongly about doing home inspections, you can do one all day long now and nobody's going to say anything about it. And if there is something you find out about it, the seller's probably going to be willing to work with you on it.
Mm-hmm.
As long as you came in at a reasonable offer and you didn't beat them up on the price on that, because you can't go back then and beat them up again on the inspection, because it has to be a win-win for both sides.
Mm-hmm.
That's the way I like to do deals, and hopefully most agents feel the same. You can't have one side at the detriment of the other side. You want both sides to be happy because it's a better transaction. Everything goes smoother. There's no resentment. There's no hard feelings. But if you have those deals that people have had, where they come in low on the price, okay, they accept the offer. Then they do an inspection. Oh, and then they come back with a whole list of stuff that they want you to do. Well, where's the win-win there?
Right.
There isn't.
There isn't. And then it creates, if you don't get any of that stuff, there's going to be all kinds of all types of people that are going to, okay, that's what we want to do in the first place. But being able to educate the buyers, and also, that's where a lot of this business on my side, when I first got in the business, my mentor had said, he's like, you have to be, not only do you have to be good with math, right, and
Yeah, yeah,
finance,
you probably do.
which it is what it is, but you have to be somewhat of a therapist, right? Because you have to talk to people and talk people through situations. You have to be able to, when things arise, you have to be able to keep everything smooth. And I tell you what, the first year was a learning curve, right? The first 6 months was a learning curve because I didn't know what I was doing. And all of a sudden an issue comes up and I'm just stressed to the max. So then what happens is the buyer stressed to the max, right? Or the borrower. In the lending world, we call it the borrower. In your
Yep.
world, it's the buyer. But, if they get stressed, now that transaction is really tough. Right.
Yes.
And then they're like, it's their first home purchase or the second, whatever home purchase it is, if something comes up and now it's an issue and it's hard to deal with, and now what is that perception, right?
Well, and you and I, as the professionals, if we can maintain and keep that level, calmness, we're the calm in the storm. If
Hmm.
we can keep that calmness, it is such a difference. Like if they call you in a panic and they start going off on about something, oh, okay, okay. I've had this happen before, and you go through your story or you tell them what's going to happen from there. If you can just be that calm in the storm, what a
Hmm.
difference it makes. It is huge.
For sure,
But it's
right?
taken years, 10 years to get
Yeah,
there.
yeah. No, I just had one the other day where it wasn't a major issue, but they perceived it as a major issue. I'm like, no, it's gonna be fine. You have to trust me on this. It's just a simple, you just have to document it for this reason and so forth. Um, and like she thought she wasn't gonna close. Like
Oh,
after we got off the phone, she still thought she wasn't going to close, and her dad calls me, which I had conversations previously, right?
the worst call
And I
though.
and I, right, and I said, "Hey Tom, how you doing?" And he's like, "Well, so Trish is thinking she's not going to close." I'm like, "No, this isn't a big deal. Like it's really not a big deal. We can make this work. I just need to have like she already provided me that because I think it was on a Friday, which I hate Fridays when like I have to call somebody on a Friday because guess what happens? All weekend long they stress,
Yep.
right? And then
And all
Monday
weekend they're
comes
calling you, keep
because
checking on it.
they provide me a document on like Friday, which now I have to get into underwriting. Well, likely it's not going to get looked at until Monday, right? It's just I mean, that's just how it works, right? So it's not like it's overnight. Now it's 3 nights. And so I called Tom. I said, Tom calls me and I said, Tom, no, we already got what we needed. Like this isn't a very big issue. Um, and we will be fine, right? But it just goes back to like people get very stressed during this process. I mean, it's a giant
Oh,
giant,
huge. Yeah.
it's the biggest purchase of their life, right? And if it's the first time, it's the biggest one ever, right?
Yes,
Uh,
yes, and you just have to number one, partner with people like yourself that are the same as you, that stay calm in those situations, who don't get them all excited over nothing. It's a partnership, with whatever lender you're working with. It's always a partnership, and you have to work that together. So you and I may have panic calls behind the scenes, but they'll never know about it.
right, right. That's for sure. That does happen. Well, we're not going to let that,
No.
and I've said this numerous times, probably on this podcast if you watched this before, but if an issue arises, that's a big one. And they do happen. They happen to the best agents because the best loan officers, because it's simply there's things that we don't know and that
Oh, it's a
things that get
moving it's a
uncovered.
moving target all the
Hmm.
time.
Somebody applies for credit unknowingly. Even though we tell them like 10 times over, don't take your credit,
Don't buy a car.
don't do anything, and but now you have to overcome, or the one of the biggest challenges as a loan officer, maybe this is just food for your knowledge, like we try to keep all of this stuff away from you know agents and buyers, but there's a lot of times where we, specifically now in today's digital age, we have to do a verification of appointment, right?
Hmm.
And those are not always accurate, specifically because a lot of companies use what is called the work number. And on the work number, if the data for whatever reason gets mixed up going into it, then it's bad data. Well, if you got a company and health partners, uh, that literally don't want to. They like, we pay for this company to do this work. We expect it to be right. Well, it's not. Now it's like pulling teeth to get somebody to do what is called a written VOE, where somebody from HR or payroll actually does this. So it's not my
Oh,
job duty. It's not, and then you have to get your client involved, and they have to go to like, hey, can we get somebody? Because like the work number sometimes won't say it won't. Sometimes it doesn't have the information correct. Now it's gotten better, I feel like, but it still is can be wrong,
oh,
or
that'd be
there's not
terrible.
updates in there, right? Or it like it doesn't show accurately to what the pay stubs show. And like because it costs, we can't do the work number on every client because it's $50 a pull, right?
Oh, wow.
So it gets very expensive, right? And if you're talking a nationwide company and you got every client that comes in does it, I mean, that's a giant expense. So that's why loan costs are higher today than they've ever been, right? Is because of technology costs. Anyway, getting back to that is, a loan officer can, based off of, like we're always getting, employment histories, getting their pay stubs, previous job pay stubs, doing our best to calculate incomes out. But if bad information comes in, or you pre-approve somebody back in, let's say March, and now it's June, right? And they finally get under contract, but I've had people where they take off 2 weeks unpaid, and now we're short, right? And if it's inside of a year, all of a sudden you have variable income. And
Oh,
that can be very stressful because now variable income, FHA allows underwriter discretion, assuming it's not too far off, to be able to do it after 6 months. Conventional loans, it's a year. If it's truly variable, it's after a year. Now, there's ways around it. Like, what was the reason? Well, actually, my mom died, and I only had 2 weeks of PTO, but I had a whole month of, like in like specifically in another country, right?
oh, okay.
So they took off and they went and they did 2 weeks unpaid. Okay, well, we need this, and this, and a letter from your employer saying this because it's just a one-off thing. And then you can potentially get past it. It doesn't always work. And some underwriters will say no, or some companies will just say, no, it's variable. We're not going to do it. And on top of that, Fannie and Freddie have scrutinized it after the fact. You got loans that are closed, and a month or 6 weeks or 8 weeks later, Fannie or Freddie audits the file and said, well, your income's wrong. And then we have to prove it to them so we can keep the loan. It doesn't get definanced.
Oh,
So
wow.
there's a lot of things that can happen on that side. And I guess what I'm trying to get back to is when that stuff happens, like I always tell my guys and everybody, and I told myself, like, you have 24 hours to find a solution, right? And when that solution comes, you got to be able to be prepared to say, here's what our solution is, here's what we have to do, right? And then you have to keep people calm along the whole process. And I guarantee you the realtors generally never hear about this stuff unless the buyer calls them up and says, hey, I'm not approved anymore, or something like
Oh my
that.
gosh.
Then the phone call comes in and you're like, oh my God. So usually I'm very good at being pretty transparent and being like, hey, if there's something that's like, hey, we are having an issue, like, this is what's going on. But my thing has always been, and part of the reason why I left a different company is that it's like we want to catch this stuff like immediately in the process, not
Not,
2 days before closing,
yeah,
right? And
exactly.
and I just got one from another one of your team members a couple weeks ago
Uh-oh.
that we closed in. We got clear to close in 13 days. It took us 17. Is over a holiday,
Oh,
um,
nice.
but we had to fix it. We had to fix an income problem, and the other company wouldn't do it, right? And they didn't even dig into it. So I took the time, dug into it, got the employer to write the letter, and was able to get away from variable income, and then they could close. So it's
But that's where it comes down to, though, too, working with a lender that has experience, that knows how to handle those types of things.
right.
Honestly, the worst thing you could do is work with a newbie lender. And I don't mean that in a bad way, but, if you're going to partner with somebody, you got to have somebody who knows how to handle things, because I don't. That's not my job.
No,
I stay in my lane, and I always tell my clients, I said, I'm not going to tell you numbers. I'm not going to tell you payments because that's not me.
Right.
I will default that I am not good in the math side. I can run a payment, but I'm not going to do it because that's why I've got you,
Yeah. And
and call them, find out. And, and I always have somebody get a payment before we ever put an offer in. I said, because it's just crazy what they have in their head and then what you come up with, totally two different sides.
I just ran into it, well, not just like last year where I had a client who was, on Zillow most of the time.
Mm-hmm.
And what does Zillow payment calculator show?
Oh, so
20% down.
low. So,
Right. I mean,
yeah.
the payment's not even realistic. And they're 3% down or 5% down, right? And they're like, well, the payment's $2,400. No, I'm sorry, it's $3,200, right? Well,
Unless
we
you got
can't afford that,
20%. Yeah.
right? And technically, if you got, so it was funny because it was like I went over payments with them because I always 100% of the time is once I get them pre-approved, it's a let's go through the call. Let's talk about your cash to close. What does that mean? What rates are today? And what your payment is. Because I did learn early on the hard way with a client because they're for $400,000 and like we can't afford this payment. They got 5 kids. No, you can't. Just because our DTI says 52% approves with an FHA, I mean that's
Doesn't mean,
over the half their income, and that's gross income, right?
yeah,
So
doesn't mean they can afford it.
right, and that was years ago. We had to cancel, and I felt terrible, and it was like, how did that miss? So every time after that, it was like we are going to either I try to do a video call because then I can visually show them, it's not
Mm-hmm.
just or we definitely send worksheets and we send our um, letters saying here's what your payments are and all this stuff. But having those conversations early and often. I usually say, "What's your budget?" And most of the time, people are going to say $1,200.
Yes.
Something
I'm
ridiculous.
paying, paying 800 right now in rent and, da da da. I'm like, oh,
Hmm.
why are you calling?
Right.
There's no house we're going to get you for 800.
Yep.
Sorry.
You're gonna have to get some roommates.
Yeah, yeah, about 6 of them.
Right.
Yeah, no, I've had it happen though a couple of times where I have gone through the process. I had one buyer that got mad at the lender that I had referred to him, and I'm like, okay, fine. Went with this other lender. We go to this house. They fall in love. They want to buy this house. Okay, great. Let's put an offer in. Um, the lender had never run payments. Never. The new lender. They didn't know their payment. They get home and they find out, I think it was like $3,000 or something like that. And he's like, well, we can't afford that. I said, well, how did you not know? I mean, because they'd picked the house, they knew where we were going. How did you not know that you couldn't afford a $3,000 payment? Why did you think you could afford this payment? And so that was really frustrating because
Mhm.
then it's time out of my time out of their time, plus the frustration. And they never came back in. They stayed where they were. I had sold them a house and they were going to upgrade, and they decided to stay. And to this day, they still haven't moved.
Right.
So, I left a bad mark.
Yep. And that's where we don't want to be.
No, no.
Uh,
And it can happen because they're not listening, they're not paying attention. I don't know how you can't. I mean, it's a big purchase. How do you not pay attention when you're talking to them and telling them the numbers?
right.
But I'm not on those conversations. I'm not privy to that. So, but that's why my first thing is when anybody ever says they want to make an offer, is I say, call the lender and get a payment.
Right.
We're not writing anything until you tell me you're okay with your payment, and then we'll put it together.
Right. And your cash out of pocket and the whole.
Yes,
Yep.
yes. Because I had another one that just recently, they want to move out of their townhome and they're looking to buy something bigger, and they didn't know they needed all that cash out of pocket.
Right.
And I didn't know how they didn't know that, but they just weren't paying attention. They were in a hurry.
Yeah, when it just there's too many times where people are in a hurry or the prime example always is I know I have great credit. I know I have so much in the bank and I know I can probably buy whatever I want, right? So what do? They don't want to apply with a lender because that gets them too committed or something, right?
Yes,
And then
yes.
they go shopping, and guess who gets a call on Saturday morning and says, "Hey, I got this client who wants to put an offer in today." And it's and so I don't have a problem doing this, right? And but
But still,
it still is like, okay, what if I had plans that day? I don't want to miss out on that, and I want to take care of my other people, right? But it happens all the time, and but then you still have that same person, and that's where I get frustrated. So I do take to 2 to 3 hours to get everything, waited for the application, everything comes in. Let's I'm not going to willy nilly the offer, right? Because I don't want to have a problem. Number one, I can ruin the relationship with the agent, right? If I screw it up, like it's just okay. I don't want that to happen, right? Oh, why did it happen, right? Well, whatever. You have to have because there's a lot of dynamics and a lot of different things. Specifically, people own a house, they own a cabin, they have self-employment. I
oh,
mean,
it
those
could
are
be
the
all
hardest
kinds of,
ones,
yeah.
right? And those are the most complicated files to make sure everything's going to work because if you and in the systems, if something's tagged wrong, like oh they're going to sell this as the previous house as a primary residence, and then but they're and you're trying to go non-contingent. Well, if it gets tagged wrong, you could show your DTI is way off. Oh yeah, they're pre-approved, and all of a sudden you get into underwriting like oh no this is where I have like you learn as a lender, but this is where I've gotten many deals, and Rocket Mortgage is one of the biggest ones I get from. I shouldn't have said their name out loud, but um, I get handfuls of transactions a year from them because they cut the corners, right?
They just got the
Right.
pre-approval sent
So
out and they don't
so
do anything.
I'm just a giant proponent. If you are thinking of buying a home in the next year, 6 months, to talk to someone right now. Like, why don't my lender my credit pulled? Even if that's the case, and you're literally I'm gonna buy, I'm targeting October, right? Like, hey, here's where we should go, but right now, let's talk about what you have. Let's pre-qual
Yes.
and just talk
And
about
it's a
like let's
soft pull
put the
anyway.
plan forward and like here because there's just too many times where things come up and like well 50% debt ratio, but you own three properties already. I mean, that's super hard to get the next one. Or anyway,
Well, I think there should be a new rule, like how they had that rule. They keep focusing on the agents instead of focusing on the buyers. They make us have that touring agreement now to show anybody a house. Okay, great, I get it. But why isn't there a rule that they have to be pre-approved? Why do I have to waste my time showing them homes when I don't have a clue whether they can afford that home or not? The lead comes in, let's say from Zillow or from wherever. They say, yep, I want to go see this house. Okay, great. You got to get out and meet them. So you go meet them. And then you find out that they've never talked to a lender. They have no idea if they can afford that property. Okay, great. So then the next step, let's hook you up with a lender. Here's my partner. This is what you're going to talk to. Let's get you pre approved. Oh, I don't know if I'm ready to do that. Can we go see these other two homes? No.
oh, no,
No.
no.
My time is valuable, and you should think of your own time as valuable. If you're a buyer, you should think your time's valuable too. And why do you want to fall in love with a house that you're not pre-approved for?
I was just gonna say that if you that the some of the most frustrating times are the people that you're looking online and you're looking at beautiful homes that are 400, 500, $600,000, but if you're only approved for three, four, 100 grand less than that, but you go out and you look at these homes, and now you're looking at homes and you get your homes, you're like, hey, this home is 500 grand, it's got a pool in the backyard, it's in this area, blah blah blah, I love it, but you have no idea what the actual payment is. And going back to the online payment calculators are terrible.
Yes.
And again, they're lead generators just to get people in the door. 20% down. They have insurance like $1,200 for annual policy. Like it's ridiculous. The taxes are from 2023. I mean, the payment is so far off that people get excited. Again, it's so that they pick up the phone and they call or they do whatever those online calculators are doing. It's super frustrating. But it did just get that out of the way and do that first and not, waste
Oh,
your time, your valuable time with family or just
anybody. And why not know? Why not, as a buyer, have that peace of mind that you know what you're looking for is in your payment range?
Mhm.
Because everybody's talking about a payment now. It's not really the purchase price of the home, but we have to back it out, you know? So like if you say, "Hey Trace, they want a payment at 3,000," I'll say my next question to you is, "Okay, what price range should I put them in?" And I'll set up a search. You know, but why not know that you, if you're renting right now, let's just say you're a renter and you're paying, let's say you're paying $2,500 a month, and you don't want to really pay more than 3,000 to buy a house a month. Well, why wouldn't you want to get pre-qualified and know that that's where you need to be and that everything's going to be good and that the price range of those homes fits into what you envisioned in your mind?
Mhm.
Because maybe in your mind you thought for 300,000, you know, I'm going to get this really nice house and I'm going to get that. Well, that's where most townhomes are today. I mean,
Right.
it's gotten crazy that you can't even, you know, get into a townhome for less than 300. I mean, there's lots at 250, but you know what I'm saying.
Oh, yes. Townhomes used to be such a good alternative too. But now the problem that we have with townhomes are that they're not.
Oh,
The
the HOA.
HOAs are ridiculously expensive.
They're
Like
crazy.
I was just looking at some for Patricia,
Oh,
right?
yeah.
Um, sorry.
Yeah.
But I was like, okay, look at here's the price range we need, and actually, no, I take that back. It wasn't for her, it was for somebody else. And she wanted to be within walking distance to work. And she's like, I'm paying $1,000 a month in rent now. And I'm like, okay, what can you go to? Well, like 15, 1600 bucks. I'm like, okay. So we got to find some cheap condos, right? She's living in an apartment,
Yes.
one bedroom apartment. So I mean, and she's like, I don't need a whole lot. Like, okay, maybe we have a chance. Some of these they're like $1,000 for
For the
these
month.
HOAs,
It's
right? I mean, they're beautiful. Like, oh, we got
they're
this concierge service and like all this
crazy.
stuff, and like the price was 180 grand. I'm like, okay, it's the same bad. So then it pulled the HOA, and I'm like, oh my God, we're talking 2,500 dollars a month for that
There was one
$180,000
there
place.
was one I looked up the other day for one of my clients, and I think the HOA, the regular HOA, was 400 and something a month, but there was a second monthly HOA that was for the
Insurance.
insurance.
Mhm.
I'm like, who do they think they're selling
I
to?
got
Who
caught
are
up
these
on that
buyers?
last year because I had never seen that before. And when you pulled up the first one, it just showed, and like
Oh,
I pulled it up online and oh, okay, $280, not bad. There was another one for $125 for it, right? What did that do to our DTI?
oh,
I
right
mean,
down
we
the
overcame it. We had to pay off something, but it was like it pushed us over the limit. And now I'm like, oh my God, we got to figure this one out, right?
yeah,
So
it's
we had to, and fortunately we were able to do it, but I mean, it sucked because I had never seen that before that they started doing then things separately. Now I've seen it a few times. It's still not that common, but it is. It's
it's
becoming more and more.
and
So,
the other thing that I tell my buyers, and because so buyers are really bad about this, is that when you have that 10-day period that you get to review the documents from the HOA, once you put a purchase price in, you get an accepted offer and then you get that HOA docs. And I got one the other day that literally was 255 pages.
wow.
Crazy. Who's going to read it? Nobody's going to
Right,
read it.
right,
But I told my buyer, I said, if you sign off on this and you did not read it, what you're stating is that I did read it. And that is, it's so important that you need to read through that.
right.
If you don't look at anything else, you need to look at their financials. You need to see, are there any pending assessments? Because a lot of times they don't pull that up and tell you that. It's hidden in those documents.
Right.
And I said, that's on you. I said, I am not going to read 255 pages. I'm just telling you right now that that's your job because they're giving you 10 days to go through it
Right.
you know
Right.
and you have to be kind of firm about it, but I've had people come up to me after the fact and go, gosh, I didn't know this was in there, da, da, da. You signed off, you
Right.
said you did.
Right.
There's nothing you can do after the fact. So it's a slippery slope those HOAs are right now, and they make me nervous. I'd much rather sell somebody a house. But even a lot of the homes now have an HOA in their neighborhood, because they've got a mailbox that's a community mailbox, and they got to have an HOA there too. But then you think, oh, it'll be nothing. I had one the other day. It literally was just for it was a little teeny roundabout there. It was on a cul-de-sac, and there was a little middle part that the HOA takes care of, and there was a community mailbox. And they sent over 120 pages on the HOA docs. Why? Why? Where are the
Some
attorneys that are writing
one
this stuff up?
some attorney made a lot of money off of this.
Yes, yes, but I told him, I said, you guys, you can't ignore this. You need to read this. Even though they verbally told us it's just for these two things, there's obviously other stuff in here.
Right.
I said, you need to go through it.
100%.
It's just,
Right. Well, my buddy,
you're having trouble
yeah,
sleeping at night,
my
read your
buddy had,
HOA.
yeah, my buddy had, a detached single family home, and it was a small HOA, but a similar situation. And he bought a boat, and the boat was too big. You could have a boat, but it was too. His boat that he bought was too big, and they threw a fit. So he,
Because it was sitting outside?
yeah, you could have a boat like under a certain like length, but this one was like a certain length. Like it was some dimension thing that like
So
he.
what did he end up having to do? Rent a storage unit to keep
Yeah,
his boat
that's
at?
what he did because he got fined, and like he fought and fought, and like out
Oh
of
my God.
principle he fought against it. But anyway, let's talk about one last thing
Sure.
before we go. And because right now, before it becomes a seller's market again, and it's so to speak a buyer's market, and houses are sitting a little bit longer on, what are some strategy? I'm going to run a strategy by you
Okay.
that's a win-win for the client. And this one is, and I've discussed it over the last few months, but instead of price reductions, because what happens is when it's on 30, 45 days, it's, oh, let's go 10 grand, 15 grand off. Let's just take a $400,000 home, and I'll just do the math. $400,000 home with a $15,000 price reduction. Okay. So for every 5 grand in that price reduction, it's about $35 in payment. So we're at 70, $105 less a month on a purchase,
Okay.
right? Um, but here's an idea for sellers out there is if instead of doing $15,000 price reduction, you do a 3% um, closing cost. Like we'll give you 3% closing cost, 12 grand. So you retain $3,000 and more, but closing cost, 3% closing cost that can be used for discount points. That's how you advertise it,
Okay.
right? Bona fide discount points. So now that buyer that comes into the for, let's say it's at the top of their range, right? That equals into be about $185 a month discount if you use that 12 grand towards discount points.
Wow, what a big difference. Instead of 100, it went to
Yeah, so
185.
you're about $80 more a month, which over 10 years is like $11,000 more in your pocket. But that payment is $182 lower versus $100 lower.
That's awesome because that's a win-win. I mean, the seller saved 3,000 and the buyer's going to save 185. It's a win-win,
It maintains the value of the home, number one,
which the neighbors love that.
correct? And then and what got me thinking about this, and I saw this on one of my webinars that I was on, is that the builders, what do they do to preserve their prices, right? And why can't other mortgage lenders compete with them because they have their own in-house mortgage? But I think it was like 78% of transactions. I think it was high 70s or maybe even low 80s of the transactions. And there's probably cash transactions that skew it a little bit. All had discount points paid by the builder because it's a lot, they got to maintain the value of all their other properties in the development. So instead of lowering their prices, they would give allowable discount points. So they'd offer like a 5.99 rate when the rate environment's like 6.75, 7, 7.25, right? So they were paying for those rates to come down. So that's when you're looking at that, anybody can do that if you're a seller. So if your house is sitting on the market, instead of reducing the price, I mean, from there's only so much it can do, but that can seriously impact what
That's a great
the
idea.
payment is.
Yeah, no, that's a great
Yep.
idea. I've got a couple of sellers. I might run that one by. Because nobody likes to do a price reduction and nobody likes to have that, you know, they like to save face with the neighbors that, oh, I got full list.
Yeah,
So it's a great win on that side of it,
right.
and then even if they went out of pocket to pay that down, it's less money than it would have been if we would have done the full price reduction. Yeah, no, I like that. That's a great one.
Well, Tracy, I want to wrap the show up. I thank you for coming on. It's been a great
Oh,
conversation.
it's been fun. Yeah, I'd love to come again.
Yes, no problem. Well, we'll revisit in about 6 months,
Okay.
and when things hopefully before it that really takes off where we think that 2026 is going to go. But yeah, that'd be great.
Yeah,
I'll
no, it
have
was
you back
wonderful.
on. So
No, thank you. And
um,
it was fun.
awesome. Well, everybody, thanks for tuning in and listening to this. If you have any questions for Tracy, you have all our contact information on here. Please like and subscribe. Thank you again.
Thank you. Have a great day.
You too.